The overall goal of this call today will be going over basic market structure and basic smart money. We won't be going over Wyckoff, we won't be over market cycle or anything like that, just basic market structure and smart money entries. So we've got a few of our actual private students on the call too, so if they ever want to hop on the chat and give their input on anything as well, that'd be greatly appreciated. So what we're going to be going over today is just GU and EG. If you guys have any other pairs you want to check out, we can check those later, but first off is strictly GU. So in accordance with market structure, what we're primarily looking for is higher highs, higher lows, or lower highs, lower lows. So in chat, I want y'all to kind of tell me what you guys see for GU. Do you guys see bearish momentum or bullish momentum long term? Bearish. Spot on, definitely bearish. All right, what makes it that way? There's two ways you can kind of tell, with trend lines or with higher highs, higher lows. So we have lower high here, and a lower high here. 3 points of structure there showing lower highs. Same thing on this side. We have lower low, lower low, lower low as well, and just continuation of structure, lower low, all those. What we can also use is trend lines for basic market structure monthly time frame. I do not use trend lines for anything lower than weekly time frame. No daily, no 12-hour, 8-hour, 6-hour, etc. I do not use trend lines for lower time frames because they aren't as accurate, because you can just kind of wing them anywhere. But for monthly and weekly time frame, they're the most accurate. Trend lines just simply help show overall structure. I don't use them for entries or anything like that. All right, so now maybe that we've confirmed bearish structure on GU, what we have to look for is points of liquidity that have been broken or are waiting to be broken. All right, so let's kind of zoom in here. There we go. Let me make sure everyone's still coming in that can come in. All right, so now that we've seen overall structure of GU, where do we want GU to continue going? Or where do we think GU is going to continue going? All right, continue lowering. Yep, definitely going lower. To help confirm that is this point here, liquidity. Liquidity was taken out by this final wick here, right here. So this helps confirm that price was building liquidity. It wanted to go lower, broke that liquidity. So we could see a continuation of that, or that could be a false move to shift into bullish momentum. I'll slowly get into that as well. So we have a possibility to continue lower or a possibility to continue on its way up. All right, let's go into weekly time frame and kind of see where structure is heading now. So here's a dead giveaway of where structure is going to end up going. We have liquidity here, lower low, lower low, lower low here at that final point of structure, correct? But we've recently seen a new higher low, which means structure could be shifting. So this is all theoretical. This could be a shift in structure to confirm bullish momentum, or it could just be a sign of weakness on a lower time frame part for a target that we need to hit, which means momentum is slowing from bullish to bearish, and we have a bearish target to go to. Personally, on the smart money entry side, I like this area here. So our entry would be in this area at 1.27873. I'll kind of go into why this works later on, but right now we're just going over basic market structure. So entry would be at 0.27873, stop loss at 1.30417, which is about a 300 pip stop loss, but still valid overall because our long-term target would be this point here, about 1,300 pips away. So to help confirm that this is possible, I'll go into the daily time frame, kind of see if the move is still there. We do see liquidity building up. So quick question, just kind of go on to the retail side of things, is generally speaking, we would see something like this and we would trade that resistance, right? In terms of retail trading. we would see this resistance and trade, sell it off of there, and then go for the sell, correct? Let me know in chat what y'all think. Yeah, so y'all would definitely try to sell at resistance or try to buy at support, etc. But we understand that on the weekly time frame, we have a target just above it, about 100, 200 pips away. Let me see the exact entry there. Yeah, it's about 110 pips away. So what's going to happen is that daily time frame, you see, okay, resistance here, wait for the break and retest, or just wait for it to touch and then drop. But on the weekly time frame, you see how large these last three candles are, proving that that resistance is going to break and it's going for a larger target, which is that weekly time frame. All right, so this liquidity here was broken by inefficiency. This liquidity above was broken by outcome candle above. So this helps confirm based on our 5 confluences for smart money entries that there is liquidity. There was broken liquidity by inefficiency. There was a broken liquidity by the outcome candle. Outcome candle sits around 0.88 on the fib level. Just to confirm that price is at premium or discount pricing to help confirm that. And it's a continuation of overall trend. So monthly says long-term bearish. Weekly says entry for a sell entry. Daily time frame says liquidity above. So we know that liquidity is going to get broken. Our weekly target is going to get attacked and then drop all the way. Like I said, our TP1 would be this area of liquidity here, which is a slight shift in structure because we know that we're creating higher lows, which is not ideal. So price could go the wrong way, but based on every other confluence from monthly to weekly time frames, we know that we want a overall bearish target. So our TP1 would actually be, all right, so if we go to weekly time frame, let's kind of fix this up a little bit. All right, there we go. Fix that, clean it up. So our stop loss would be at exactly 250 pips. And then our TP1 would be right at that last point of structure at 670 pips. I mean, 690 pips for a risk reward ratio of 2.79. So you're risking 247 pips to catch 689. Our second target would be this point of structure here, the last lower low, about 1,326 pips away, about 5.36 in terms of risk reward ratio, which means you have to take this trade 5 times and lose 5 times, and all you would have to do is 1. I like the one on the daily, but it's high. It's way high. I know exactly which ones you're all talking about. If we take this and it's valid, it could reduce our stop loss significantly, and I'd love to see that happen. So this is the one everyone's talking about in chat. Yeah, it's a swing trade, but we can use smart money on 1 minute time frame as well as Wyckoff schematics to catch like 1 minute scalps. You can scalp, swing, intraday, intra-week, etc. with smart money, Wyckoff, and supply and demand concepts. All right, so now your stop loss has moved from, let's say, almost 250 pips to about 60 pips total. Still the same target though. All right, so let's move this up. Fix that, got it. All right, so now your stop loss is sitting closely around 52 pips, and your initial target, so that TP1 is still right here at last point of structure for 1,000 pips, risk reward ratio 19-1. TP2 sitting at last point of structure here at 1619, and because it's breaking this structure to get down here, it's a continuation of that trade. So we can expect price to continue going down. I mean, we can go 2,000-3,000 pips with this trade, or initial risk of 50 pips. So this is why we trade the way we do. It's called institutional trading methods. In short, trading with the banks, such as IML calls it. In theory, we are not really trading with the banks. We're more just following the breadcrumbs that these banks leave. Oh, I got some folks. Yeah, I know y'all love IML, but we're not with them, so don't worry. So we're pretty much just following the breadcrumbs that these institutions and banks leave and just following it with their continuation trades and everything, just kind of follow on. So you can kind of see the same thing going on with EG as well. Let me go back to EG. Oh, hold on. There you go. Found it. Let me make sure I wipe this one out. Yo, Leslie, you wild dog. All right, so monthly time frame. Let's kind of get a feel of where EG is heading. Where do y'all think EG is going based on monthly structure? Let me know in chat. All right. Oh, sure. Called a buy on daily, maybe possible, but I got a long-term sell. I'll show you all why. All right, let's get more active in the chat. What do you guys think? Buy or sell? Long-term, what's EG going? Bearish. That's a good idea. All right. So long-term, we see bullish structure here. We see bullish structure here as well. One thing interesting though is liquidity here and liquidity here. Let me mark it up for y'all. So 2 points of liquidity, aka support here and resistance here. Now, which one's stronger, resistance or support in this area? Resistance, exactly. Resistance is stronger in this area because of the length of time it takes to touch the same area. In terms of length, resistance is stronger than the support. But because the support is weaker, I'm expecting support to actually break faster. I'll kind of go into the details of that later. Weekly time frame, we actually see a sell already happening that some folks missed. We have liquidity here that was broken by the outcome candle. Same exact trading style that we all follow. We have our outcome candle here on the weekly time frame. And our stop loss would be up here. And y'all can see that this trade is already actually 100 pips in profit. All right, hold on, let me fix this real quick. There we go. So we can zoom in a little bit. So we can see that we expected price to come up to this point at this blue line at 0.90161 and then drop. And that's exactly what it did. It's already about 80 pips in profit from our original entry, 90 pips or so. So we're expecting it to continue down and break this liquidity here and then go to our monthly target right here. You know, you can see it's the same exact setup as everything else. Inefficiency broke liquidity, outcome candle broke liquidity, and it's just a continuation of trade. There you go. Liquidity here, liquidity here. We're expecting price to come at least to right around here, 0.7850, and then stop loss here. There we go. There we go. So we're expecting weekly to push price down, monthly to capture orders below the support, which is where a lot of retail traders are wanting to buy because of the support zone, and they want to break that resistance. They're just buying too early. That's all it ever is. So we're going to buy at 0.7850, and then we're going to chase the trade all the way up to break that resistance and continue trend. To help confirm is that when price hits here and then moves up, it's creating a new higher low. So higher low here, 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 and then here when it forms. And if it respects this area and creates a new higher low, we can definitely guarantee a continuation of bullish momentum for EG. Now, if price breaks this area and goes lower and creates a new lower low, then we can see a bearish momentum and change. All right, y'all got any questions for me? All right, no questions. Sounds good to me. So anyways, if you guys are interested in continuing learning these concepts here, let me just write this down for y'all. T.me/outcomereach if you guys are not in our free group. If you want to follow us on IG, outcomereach right here. If you guys want to find out more about our trading style or our trading methods, we have 2 websites you can reach us at, outcomereach.info and outcomereach.com. And we also have a YouTube channel, and we'll post a link into that later on in the free group for y'all. Sound good? All right. I'll catch everyone later, and I hope y'all have a wonderful day.